Okay, market recap coming in. So oil ended up hitting kind of 4-hour area we had marked with the order block and everything like that. So really, it's more so the daily order block we were looking for an internal retracement to. Ended up shooting through that. As for the session itself and kind of overnight, and the really big gem I kind of want to point out is as you're going into New York session, you have your futures open here. All of your delivery by 8 o'clock. Notice how all immediate overnight sell side is taken. So if you think about time, and as for just the rest of the session overall, so you're like here, even 8 o'clock or 8:15 right afterwards, there's no immediate sell side to run for from the overnight session. There's literally none. All of it was taken here at 8. All that was generated from London and everything was all taken. So by the time you're opening up into New York, you clearly have buy side remaining just from people shorting and chasing. And then again, no sell side whatsoever. Yes, you have the sell side of the previous day, but ideally your high time frame would have kept you out of that. And again, at the very minimum, all of the recent overnight data, essentially resting from here to here, all sell side is gone. That is your big takeaway that you can use a lot of the times to get a good directional bias, but it's something you can really only see once the market kind of opens up and then goes from there. So that gives your move up. You then, on say the 3 or the 5 minute, you get your BISIs tailing, up close candles lows getting traded through, and then FVGs on retrace. Same type of deal, FVG entry, FVG exit. All this can be your SMR up here. Worst comes to worst, even like a 5 minute, you can just trade this premium to discount. When you have your FVG on retracement here, or your failure swings getting swept, you can just sell it, taking it premium down to discount. Stop above here, you're good to go. Then get your up close candles, order blocks, all that good stuff, fully supporting until you end up reaching this dealing range low. But the very worst case, you can get out at discount, say in this case is order block and FVG paired with it, and you can trade that internal range instead of always trying to go for external to external. Wait for your CSD and then play that new dealing range. Indices themselves, I honestly don't know why we mooned at 8:30. I'm sure there was something there for something, but a lot of stuff kind of pairs moved. So same kind of idea in a way. So even though the midnight sell side and overnight sell side wasn't taken, everything past midnight was pretty much swept and crushed through, especially when you have this wide movement up here at 8:30. A lot of people are going to FOMO by that. Now, the reason that's so important is that it's generating a new liquidity of longs that are now entering the market, meaning those people are now long and in the market. They will have a stop loss somewhere. In this case, the obvious was the swing low. They're getting punished with FVGs on retrace, and it smacks all the way down, and that allows smart money to buy everything down there because they know that everyone that chased this long is likely to have your stop loss underneath here. You then get the macro time open, trades underneath these failure swings that are stacking up on the 5 minute, sweeps that, and then continues through this down close supporting afterwards, allowing the market to trade higher. Again, down close support, FVG continuation, all that good stuff to allow it to trade through. And again, same thing with the idea of the sell side delivery. If you have sell side delivery through here, when you're on a retracement, it only needs to deliver back down to the highest point of the previous sell side delivery. Same thing here. That's how breakers essentially start in mitigation blocks, if you really think about it. The sell side delivery only needs to be as low as what it was previously. That's why it allows it when it reaches this as well, just to bounce right off it and then continue through it. You then get just your high placement and then your high to close for the end of the day. NASDAQ definitely more clean in terms of the idea. Running, again, all of that internal sell side. Same idea. Hitting, in this case, a BISI here underneath. So definitely some cleaner delivery overall. And on a 30 minute, it really was just a clean fair value gap here sitting. Again, just to the sell side delivery. It's something you can use a lot more in bodies. But in this case, it's really just, again, an internal run. And even if you let candles close By the time you're closing back in the range, bodies tell the story, wicks doing, aka the damage. You're closing back well above here in the range, following the bodies, much more likely to expand higher. And then even worst case, FEG continuation, pump a new high, and that's your high of essentially the week. So, and it looks very, very clean on an RTH chart as well. Market opens up, trades down immediately, trapping everyone on a gap up, and then just really melting up forward and through. Higher, higher, and higher. FEGs, down close support, all that good stuff. So, Dow, shoutouts to Dow, for some reason did the same thing, but wanted to just to keep rolling all the way until noon. So, did not want to follow the other indices, but it really didn't since yesterday, in all honesty. Even the Thursday move that SPX and Qs did were not the same as what Dow did. So, it's just one of those things. But again, even if you were trading Dow for that short rollover from 830, same idea. FEGs, market just trades back up into the order blocks. FEGs and order blocks, failure swing here. Just limit ordering the up close candles all the way down, really until they fail here. And then you can play your CSD back up. And even if you want to try to take it out here just to trap people, then go for it. Just because it didn't make the proper premium retracement needed. It shot down, consolidation, push down, and then another final push down. That's just going to trap people for a turtle swirl that are really, really trying to short it and get them to sell the bottom. As every other down move was first led with a proper retracement to some type of premium array. So I do want to point that out. If you ever get that kind of push, consolidation, then another push again aggressively without the retracement, very, very likely that you can retrace back the other way. And even sometimes go for the external to very release a deep premium retracement to continue downwards if it wants to. So, but, that's pretty much it. And even same thing for gold. If you're just going to follow the delivery based off of 830, order block, FEG trading up into this, as well as the breaker in this case. Internal run here, FEG continuing, making a low. By this point, this up close candle here, this order block supposed to be holding price, has now failed, and you now have closures above this downside delivery. That's your CSD. That is your market structure shift if you really want to go there. That allows you to then start look for your low risk buys down in here, and then you get your down close support and just continuation all the way through. And you can follow the exact same thing the other way, and then go from there. And even play it alongside for the London close if you really wanted to. But it's very, very important just to keep following the delivery and keep playing until it stops working. Extremely powerful and it's a lot more occurring than you think it is, truthfully. So, but other than that, we will see kind of get the outlook going after the recap on Monday. We do have CPI on Tuesday, so I'm very keen on, we could potentially go high of the month on like Tuesday. I'd be open for it, but at this point, come on. We have been really about 13 candles green and 1 red. So no reason to stop, but COT is loading up something. What they're going to want to do it though is another story. More so of when at this point. But the last thing you want to do is try to call the top in a bull market. So I'll leave you guys off with that one. Other than that, I will be trying to do the order block video on probably Monday. Get that done squared away. I was just thinking about a lot to put in, but it'll be good. It'll be a very, very deep lecture. So expect a lot out of it. It'll be very, very useful. I think will help clear up a lot of confusion you may have with order blocks, or even just starting off with them. Making the analogy to the balanced price ranges and everything like that. So, but other than that, I will see you guys in the next one, and thank you for watching.